Welcome to Art of Forex channel. In this channel we will talk about Forex trading. Please like and subscribe if you found this video helpful. Right here we have an example of a chart. We got lots of people buy and sell here. Some buy USD, some sell USD. So if I wanted to buy now, we have two types of order. One is pending order and instant order. Because we buy, the market will find the people who want to sell. Let's suppose at 1.12900 we have 5 million US dollars wanted to sell. And then here 4 mil, 3 mil, 2 mil. And then here we have people who wanted to buy 2 mil, 3 mil, 4 mil, 5 mil. We can't see all of these orders behind the market on this chart. Because this is tier 3, we cannot see all of the orders when we open MT4. We can only see the candlesticks. Every broker has a tier 2 MT4 manager. We have nothing in the depth of market because the broker did not provide us with the data. They used to give but no longer do. Another method, if you want to see the depth of market, you can use C-Trader. This is example of C-Trader. C-Trader is a platform almost like MT4. We can see the depth of market right here. All these things only available on tier 2 or only at advanced platform. Assume I want to buy $1 million. What happens to the market when we want to buy? The market will find the sellers. In the law of supply and demand, or the law of buy and sell, if you want to buy, you must first find a seller. When you want to sell something, you must find a buyer. Assume you want to sell a car and need to find a buyer. Where would you like to sell? Of course, you sell on online markets such as Facebook Marketplace and others. If you want to buy a car, you should go to those who want to sell, a used car dealer, or a private dealer. So this are the area want to sell or supply. Typically, the seller's price will be higher than the market price. If a kilogram of chicken costs $10, the sellers will sell at a higher price to make a profit. As for buyers, buyers will buy at the price will be lower than the market. Want to buy and demand. For people who wanted to sell, they will use pending order sell limit. They wanted to sell 5 million at 1.12900, while others wanted to sell 4 million at 1.12890, 3 million, and 2 million. As for buy, the same. 1.12850, 2 million below the market price. 3 million, 4 million, 5 million. So all these people who wanted to buy will put buy limit. As a result, when there are many buy and sell limits, the price does not move. Because the seller is stubborn, wanted to sell at higher price, and buyers wanted to buy at lower price. Example. You bargain. You want to buy chicken at $7 per kilo, but the seller sell at $8 per kilo. So the deal has off. Because there is no deal, the price has not changed. Let's suppose we have an impatient person who will buy at any price, so this type of person will move the market. For example, if I want to buy 10 million, the price will go to those who want to sell. We have 2 million sell right here, so the price will stop for a while. The person who wants to sell 2 million, I want to buy 10 million. I filled 2 mil right here and 8 million unfilled. So I still have 8 million unfilled. The price will continue up, finding those who want to sell. Right here we have people sell 3 million, so I have balance 5 million unfilled. I want to buy 10 million, but now I have 5 million filled. So the price continue goes up. Right here I bought another 4 million, balance 1 million unfilled. The prices goes up because, when we buy we will find those who sell. The price stops at 1.12900. Let's say this transaction used 1 hour from the bottom until the top. When we change to candlestick it will become like this.